Harlan Pyan on of All About Trends.
Well, tomorrow morning, XOM is going to report. We talked briefly about it making a new high there right as we started the show, and it broke out nicely, got up to 102.57 before pulling back. We'll see what Harlan has to say about XOM here in a second as he comes on the show. We can hear him ringing in the background. But XOM here just trading flat this morning at 101.51. Harlan, are you there?
I am here. I am here.
Harlan is
Apparently
here.
Yep.
I think
Apparently
Harlan.
the pop-out window works.
I think for Harlan, I think this is what he looks forward to all week. Did Harlan? Is that what you do? Like, are you like? Do you
I
do,
do. I
do,
have fun here. I really do.
do you get a tissue out like after the show's over and you say, "Man, I'm not going to be on the show back until next Wednesday."
Oh, yeah. Bummer.
So,
What am I going to do?
all right. Well, what do you think about that little spike down on the GDP number? Does that change your? I mean, we were floating up towards yesterday's high, and then you get a bad number. Does that adjust your trading strategy at all for today?
What are the E's doing anyway right now?
They dropped 2.25, 69.50. We didn't make a new low on the move, but we were trading right near the highs when that came out. They didn't like the number. They did the old flush, but didn't make a new low. Now it's just kind of climbing back, or trying to climb back,
Yeah.
I'd say.
So it's just waffling.
Yeah. Yep.
Yeah. Well, I guess I heard Dennis yesterday, and when you look at the daily, I think he was talking. It wouldn't surprise them to see a break into a new high just to shake everybody up. I'm kind of of the same opinion. If we are going to work our way higher to retest that high, because sometimes when you get really close to a high, it tends to act as a magnet.
Yep.
So, for me, hey, if we go there, don't go buying the breakout because, right into a new high in the S&P, guess what? There's a lot of people who have stops placed there that are short. So what do you think those trade bots are going to do? They're going to go, look at all those orders. Wow, can we inflict some pain on the shorts? So what do? They take it up there. Those people stop out. Once that dust settles, guess what? Yeah, the market rolls over, but it rolls over without those people.
Yeah, you're exactly right. Like that's what I always say too. I call it kind of like the tractor beam is what I used to call it, where it's a magnet, tractor beam, whatever you want to call it. It'll go up there, hit those stops out, and the other thing you got to consider too is when people are short the stock, especially the short-term traders, they throw out bids right away, and those bids lend support. Once you shake out those shorts, all of a sudden there's no more bids or no more short covering there because they've covered. So then it actually opens up a little bit of air below, and then if you get the breakout players and swinging them the other way, you can hurt all those guys too. And the market always likes to inflict the maximum amount of pain on short-term participants there, and I think it would do it in that case. If we went up there, it took 1903, 1904, everybody on CNBC would be like, "We're going higher, new highs. You can't stop this market." Everybody would get bullish all there again, and then I think the floor falls out from under them. So that's a scenario that I'm looking for, and that's a scenario that I'm going to be playing. I agree with you, Harlan. I think if it starts to break out over 1900, I'm going to try to short that breakout.
And you know what? The market's going to take advantage of everybody's emotional extremes.
It's what it does.
It's like, yeah, oh, absolutely. You can't look at this market and say that it doesn't trade off of emotional extremes. I mean, just look at the last few days. Strength gets sold, weakness gets bought, all in micro time. You look at the daily charts, they're kind of a mess. So, but guess who's having fun? Anyone who's an extreme short-term trader that trades the extremes.
Hey, Dennis, I kind of smell a little bet coming on here.
Uh-oh.
We're right here at 1870.
All right, give it to me.
I'll take 1840, and you can have 1900.
Wow. And it's all going to happen probably this week too, because we got so much fundamental information happening here too.
Well, that's going to be a fun part too, because, look at today. I mean, if you're operating in today's environment alone, all right, so the E's are starting to roll over on GDP. Well, okay, so what if we keep going down, down, down? Well, guess what happens today? Fed policy today. So, because that's really, in my humble opinion, that's the only tool they got anymore is to just talk. So, Janet talks and, we're not so, mean on the economy. So then the next thing you know, here we go to the upside. So, personally, I think both you guys are right. I think we could, those
I
are the
think so
numbers you got to
too.
frame.
Yeah,
I think so too. Like that's the whole thing why I'm torn on that bet because I'm still bearish overall. I just think we could have a 30-point pop to shake out all the shorts and then go down there. So that's the scenario I'm playing. So
Actually, that
it's
would be
hard.
really healthy.
Yeah, it would be actually. Shake out the shorts, pull back, get all them out, and then it would be healthy to do that. So
so no bet,
So,
no bet.
no way.
Well,
no
no,
bet. I'm not in.
Maybe
Maybe
today,
Harlan
aren't you?
wants you on that bet. I'm
The
not
only
taking-
reason I'm saying this is because we've come up to this area a couple times, and we came up there in March, ran up, had a couple tight ranges, and then we gave away. We came back up here in April, exact same level, inched our way up, had 2 days of tight ranges, gave away. Here we have the breakdown again. We come up again. We have one kind of big range day, but now we're on our second day of just a tight range. I mean, the S&P is usually, I mean, to me, if this move's continuing, we should be just blowing through this 1870 handle. We should be blowing through the all-time closing high at 1882.50, and we should be moving up there. I mean, to me, that people are just saying, hey, we got through the previous day's high. I'm still selling. I'm still selling at 74. I'm still selling at 75. I'm still selling at 76. And, just in the midst of the earnings season and stuff, for me, if it doesn't go there, maybe just impatience with the markets and whatnot, but when you have a big run up, you get a period of consolidation. Yeah, it could just be another continuation of the trend. But since the market has been up here, the last couple times, this is what happened. I guess I'm just banking on the same scenario.
You don't think everybody's too short here, though, Joel? Like everybody I hear on CNBC is like, and even in the Twitter and stuff, everybody seems to be leaning a little bit on this level. They're all saying the same thing. We're
Okay.
thick up here, and I don't know. I'm always a crowd fader. So, what do you think, Harlan? What do you think?
Yeah,
overall?
Harlan, you got to settle this argument here.
Well, I think you're just in a big chop fest and get chewed alive here. When you look at the S&P, I mean, look at it from March and April. All it's done is chew you alive. So, but that being said, as I look at the daily, like Dennis and me were talking about, where hey, we can easily see us break out, retest that 1895 level. Look what it did at the beginning of April. If you look at all of March, it was a brick wall at what 1880-ish.
Yeah.
And then what happened? You had 2-3 days where it broke into a new high. Everybody was just, hey, sky's the limit, and whap. So that's exactly what me and Dennis were talking about. What could occur should we go up there? But I can also build a case for us going down to 1840, because there's some good support, 1835-40 zone. Mm-hmm. So, it's really such a middle of the road that if it hits, it hits. It's, if you get your trade, you plan your trade, and if it comes up there, and, there's a trade for you right there on the short side. So, when I look at it from that perspective, okay, if it goes up there, yeah, I'll take the trade. If it doesn't right now, this is just kind of a lot of waffling around.
Okay, let's move on to some individual issues here. I know this is like so far away from your moving averages and stuff, but Twitter traded down $5 today. What do you think about that?
Well, honestly, I think a company is only as good as its stock.
That's not very good right now for Twitter.
Well, pretty much. If you really think about it, a company really is only as good as its stock. What's going to make you the money? The stock. What's the stock doing? Anyone who's a trader, is very keyed, or a technician like we are, is very keyed on what's the action. Action speaks louder than words. And, obviously, the impact is words are creating a reaction. But so it's kind of like what Dennis said. I'm very much the same way. You grab a chart, it should just jump right out at you. If you have to squint to see a pattern, it's not there. So, you just look at it, and Twitter is just, I don't know, there's nothing there to work with.
Yeah,
it may be a great company,
so too.
It may work for people. There's just nothing to work with.
You're in the middle of nowhere here at 37.70. You really are in the middle of nowhere. If it gets back up to 40, then I think everybody that's bottom picking is looking to get out, and I think you run into resistance up there. But right here at 37.70, you got the pre-market low down, $1.20 lower here, and that 40 level is 2 points higher. I think I'm sitting on my hands at 37.80. I just feel like there's no trade here right now.
Exactly. And look at it this way. Draw a line across just shy of 40-ish since it went public. Well, now that you broke that major support, guess what's a brick wall?
Yeah,
$40.
we were talking about that.
Yeah. Right.
Okay.
There's nothing else to talk about.
What about Apple? Had the good earnings running up, just kind of consolidating under the $600 level here. Two highs right at the same area here, bumping up against today. Do we take it out today and go up and hit that 600, or what's your outlook for Apple?
I have a hard time buying a stock that went from 530 to 592 in 1, 2, 3, 4 days. That's like chasing a bus to me. So, I can see some support. If it comes down to 570, I can build a case because that's where it broke out of, but not here. Strength does get sold. And why isn't Apple getting sold? Well, what is it, 8% of the NASDAQ? So could you imagine on a bad day if they killed Apple too, what the impact would be to the indexes?
It'd be in real trouble because everybody's been fleeing into Apple. Like that's the
I think it's
hideout.
a tape painter.
Yeah,
they use it to tape, to paint the tape.
Oh, that's it. Dennis, can you put that one in the glossary? We'll have to put a little asterisk next to
that list I'm putting together there. I have so many terms in there. I have to sit there and define them all, but it's getting longer and longer and longer and longer. I'm gonna need everybody helping me with that one. So if you got terms that you want defined, send them to me because the list keeps getting bigger. I'm gonna have to have everybody help me actually writing the definitions for these things. So
okay,
it's all in my head.
All right. Anything? I mean, with the market up here at highs, is there anything that you're talking about selling pops? Is there anything that's just kind of popping out here, rebounding that you might be looking to short here over the next day or two? Any tasty levels?
Well, reactions, earnings reactions have been getting shorted. And we've seen that a lot. Where a lot of those that pop, they tend to right away drop. And you're looking at, just a slew of companies yesterday came out, and you've already spoken about a few of them. Panera, is another one. There's just a lot of names that are just getting hammered on earnings. You sure don't want to, short something. At least I don't. That just fell 10, 15 points. So and that's the same thing with it's like buying Apple that just popped 30, 40 points. I do have my eye on one name. It's a small name. And it's just, you pull up a daily chart of FYRG.
FYRG?
Sam, Yellow, Robert.
Oh,
Sam.
Okay, sorry.
Synergy Resources?
Okay. Yeah.
Yep.
Okay, all right. Ooh, look at that.
Now, based on what we talked about how it should just jump out at you,
I'm looking at it.
Oh yeah, I see this. I mean, this is the kind of trades I like here. When you come back, you have a low here. Let's see what the exact lows are here. You had the pop up. You had a low at 1169, and then you go back a few sessions. You had a low at 1165. So trading up a little bit in the pre-market, but to me, this is kind of a thinner issue. Through that 1165, I'm looking for the lower 11s.
A lot on that chart. The number that jumps out to me, just looking on it from that monthly perspective or from the last 2 months, is $11, Harlan,
right.
And that's where it looks like I'd be a buyer.
That's exactly what it is. Let them come to you. Some will, some won't.
It's a great point.
I look at it this way, and this is kind of what you and I. This is exactly what you and I were talking about, Dennis. Where it's like, hey, this chart should just jump out at you. You should just bam. See it right away. And it's plain as day, $11, their support.
That's the number. Yep.
So are you apt to short it going into that, and covering there and reversing
I'm
going long?
I'm not going to bother for 75 cents.
Oh, really?
Because,
okay.
Nah, because we don't know, we don't truly, it's pulling back, but we don't know how far is it really going to pull back. It's managing the unknown the moment you take the trade. Now think about that one. Because the moment you hit the enter button, you are at the mercy of the market, whatever you do, and you have no control. So that's why we, as chartists, we tend to like to use support, resistance, to help define where our fluctuation risk is. It smooths out the volatility and the internal volatility within yourself.
And Harlan, I agree with you. And it's all about knowing when to swing the bat. And if you're swinging at 1176, you don't know. It could just take off and could be the low here because it's still in an
Yeah.
uptrend. It might not give you that chance to buy it back at 11. But if it's to pull back to 11, and that's what we always try to set up on the show is scenario analysis and where to swing the bat. And just like on Twitter this morning, if Twitter gets up to 40, you can maybe try to swing the bat with a potential short trade here. If SYRG gets down to 11, you can potentially swing the bat on a potential long trade down there. And I think that's what you're talking about, correct, Harlan? Is when
That's
to swing
exactly
that
what
bat.
I'm talking about. You have to be prepared in advance. You have to have a method to the madness. And even if you do swing the bat, guess what? You can be the best chartist in the world, and you're still going to, one day, you're going to be the ball. Just like one day you're the fly and one day you're the windshield. So, it's all probabilities. And, what we tend to do is we look for, the highest probabilities as chartists.
Okay. All right. All right. So I'm still trying to get you to find an issue to short here, and then you bring up SYRG, and I'm looking at. That's the good thing about
It
charting.
does look good. Hey, it is what it is. You got to trade what you see.
Yeah, and I look at it like, whoa, going through the double bottom, going to 11, just kind of like my bearish nature. And then you're looking at you and Dennis, the perma bulls. You're like, oh, I can't wait till this thing gets back to 11 to buy it. So that's funny that when we got three people looking at the chart. Two different opinions. You guys are probably right, but
it depends on what time frame and frequency you're operating in. Joel, I can build a case for it. Yeah, it can go from 1176 to 11, and on the short side for a scalper day trader, that's a good trade. I'm not going to deny you that because it's true.
Okay, all right.
So it's just a matter of what time frame and frequency are you as an individual operating in and living in.
Okay, we talked about the biotechs a lot, and a stock like Biogen is kind of broken down here. So, is this broken through your levels here, where you're looking to short it on a pop, or are you still? I mean, because there's a lot of people. I mean, if you look at this, and also with charts, you can look at the time frames. You can be saying, hey, this is just a healthy pullback to 270. 275 is major support here. I mean, what on a stock like Biogen here? What's your take?
Well, from a big picture standpoint, yeah, 260 jumps out at me. It just boom, But that's like very, very big picture, But when I'm looking at the 6-month chart, yeah, I can build a case for hey, there's a head and shoulders top here.
Okay.
But I can also build a case for 270, which is also the 200-day moving average. That's going to be stiff support.
Yeah.
So knowing that that's going to be stiff support, what if it comes down there? Okay, if it comes down there, you better be prepared to potentially take a trade. What you're going to want is on the long side. What you're going to want to see, you're going to want to see that number defended. So you've got your level. See if it gets defended. See if it stabilizes. Because look at the last time it hit that 275. It sat there for 3 days. Mind you, it had a 10 to 20 point swing each day.
Right.
And that's what we're seeing a lot of these days. Big wide swings on the average daily ranges. So you need to allow for more flexibility and fluctuations than normal. But if it hits 270 and it stabilizes down there, it's probably good for a trade. Who's not to say it goes range bound between 270 and 310 for the next month or two?
Right.
That could very well be, and
you don't have a driver. You don't have a driver right now. You just had earnings, and Jake likes to point out, the analysts are kind of quiet now. They're kind of in there, okay, well, the numbers are coming. I'm going to see how really right or really wrong I am, and how the numbers shake out, and then once you get through the earnings seasons and they crunch their numbers, and that's when the upgrades and downgrades have a little effect now. But you kind of got that the street, the analysts hanging under their hiding under their desk. So what's going to be the driver to take this thing back up to 310, 320? I mean, obviously with a stock like Biogen, it's the trials and there's some government scrutiny going on with Gilead and Biogen regarding the prices of some of their drugs. So, boom, if something like that comes out and the government says, hey, you can't charge $75,000 for that, we're not going to let you, charge more than 50, then
Right.
you're going to see some wildly adjustments to the downside for earnings. So you're right.
True.
And we Dennis, you got to put SOH, sit on hand sometimes is
It is. Yeah, that's sometimes the
Yeah.
best trade,
and you know
man.
what?
I was going to say
Right, that would be a really good thing. Let things just settle down. And now that you got this event-driven time band done, let the stock put in some chart time. The best patterns take time to build. Bigger, we've all heard the phrase, bigger the base, bigger the break. Same thing, bigger the pattern, bigger the break. So, Biogen, actually, if you look at it here over the last 2-3 months, last 2 months, kind of looks like Facebook.
Right. Okay. All right, Harlan. Well, thanks for coming on. If there's any other issues, stick around in the chat room for a little bit and see if our traders can throw out some individual stocks for you to look at. Thanks again for coming on this Wednesday here. Enjoy the rest of the week, and we'll be back in touch with you.
Guys, do the same. Thanks for having me.
Okay.
Thanks, Harlan.